please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
There goes the bell, 1.6 down, 170 down on the Nifty. So it's not as brutal, but you never know. 500 down on the Sensex, 515. That's 34,000 given up, 34,890 thereabouts. Nifty Bank again is the weakest link, down 1.8, 470 down. And the mid-caps are the weakest link, 2% down. It's still holding on to that 170 down tick, so 10,400 is being held for the moment. Weakest stock perhaps is, as we were just discussing, Indiabulls Housing 3.5 down. Actually, all finance stocks, Indiabulls Housing, Bajaj Finance, Yes Bank are the ones that are among the top three. Metals also, Vedanta also falling. Adani Ports, UPL, HDFC 2% down. So you're getting the non-bank housing falling first, non-bank finance stocks falling first, and the banks are later in the list. Well, just about everything is down, but it's not as bad as the SGX Nifty indicated. That's the important point. 10,400 is being held. M&M, Wipro, Lupin, HUL are the least of the losers. Mid-caps? Actually, it's not fallen so much.
You know, it's, of course, it's not fallen as much. It's still down about 350 points, but Glenmark really takes your breath away. It's getting smashed right now, almost 9% gone on that stock. Not only weak numbers, commentary from the management is also quite weak. So the street definitely doesn't like that. It has Talwalkar's for company. After a very, very long time, we're actually seeing Talwalkar's report weak numbers, a fall in the revenues. That stock is down almost 6% right now. Petnet LNG as well, the margins have fallen this time. The revenues are flat, something we haven't seen in a while. So Petnet LNG is down about 1%. Manappuram Finance is down almost about 2.5%. So these are the stocks that are reacting on the downside to their numbers. On the upside, Fortis, of course, because of that news flow of the resignations, there's some relief there and the expectation that the deal will go through. So Fortis Healthcare is now up almost 7% and gaining ground. A lot of volume pickup over there in Fortis. Let's take a look at SAIL as well. It's in the green by about 1%. It's turned profitable after 10 quarters, looking good. A couple of more good numbers were Trent, Excel Crop Care, Coffee Day, Brigade, etc. So those are some stocks. Of course, mood of the market is bad, so you can't really look at the stock prices right now. But otherwise, Anuj, for the market, yes, it's gone, but do you think that this is something that the bulls wouldn't mind?
Yeah, you know, actually, it would have been better if for the bulls if you know, it was
been a bigger gap
down. This you know, leaves market a bit vulnerable to a bigger fall. And as you pointed out, the reaction in, say, a name like Glenmark is quite interesting. But 170 points lower is what we have right now as far as the Nifty is concerned. You know, Sonia, you spoke about Fortis. That really is interesting because that's now circuit up, 10% higher. That's an upper freeze on Fortis for the time being. Will be interesting to see, you know, how that goes. But it looks like it could be a really interesting day because now down 170 on the Nifty. I think the HDFC twins have opened better than what you thought they will. Looking at the ADR performance, for example.
The entire market has opened better than what the SGX and the ADR indicated.
Exactly. So, but I will talking too soon. Ashwini, what would be the call here? What would be the trade here right now?
See, the trade is very simple. We have opened below yesterday's range. Now, you know, some people who went short, took short positions home yesterday, they can, you know, cover a bit. But is anybody, you know, running to buy? That seems unlikely. You could have a 50, 70 point, you know, on a bank Nifty pullback, maybe 20, 30 points on the Nifty. But overall, it remains weak. So the idea should be to get short on Bank Nifty because the uptrend that we had towards 10,600 thereabouts, that certainly has gotten aborted. So possibly one more low of the day should be made before if there is going to be a larger pullback, because the downside of this range is 10,300. You still have 100 points to go. I think once this early morning is over, I think selling should resume again.
So you are taking shots on the Bank Nifty right now, Ashwani?
Yeah, that would be the call, because each time you see any sort of upside, that should be the position that needs to be taken.
Okay. We started with about 16 in the red to 1 in the green. Now we are about 13 in the red for 1 in the green. For what it is worth, it's a broad-based fall as well. Mitesh, early morning trades?
Lada, I think one simple trade, I would go long on a Bharat Forge and keep short on the Bank Nifty. So I think that would be the trade which I would recommend early morning.
Okay, go long on Bharat Forge and keep short on the Bank Nifty. Just a couple of more stocks to point out. On the upside, Religare is now up almost 4% TV Today, that reported a good set of numbers, is also up in the green. So is SKF, up 1.5%. And Soba Developers and SAIL are two other stocks that are bucking the trend this morning. Prakash Gaba, any thoughts?
On Shoba?
No, on any of the stocks that
I
you
like
spotted.
two stocks on the shorting side. I would look at ITC. That looks weak to me. ITC can see a slide to maybe around 265 zones. Even IndusInd Bank looks weak. Very good chance it can go towards 1625, 1600 zones. Both look weak to me.
Okay.
Okay. Actually, we are the market which has fallen less in the global markets. In Asia, Hong Kong, Nikkei, Hang Seng, Korea are all worse off than we are. Our early morning start is milder.
Yes, but you know what? Now HDFC is making low of the day. So you know, it sort of, as we discussed, it didn't perhaps open as low as you thought. It opened at 1788, but from 1788 now it's gone to 1722. So you know, that's the first big stock which has started to make the low of the day. I think HDFC Bank is following suit. That's also now starting to make a low of the morning. So that is quite interesting right now. And if you see a couple of other stocks as well which are moving to the low point right now in the broader market, you know, Infosys, for example, is now making the low of the morning. ITC is now making low of the morning. Ashwini, among the larger caps, which one looks the weakest to you?
See, basically all of these stocks are stocks which are owned by foreigners, and to think that they are selling all over the world but they will buy HDFC Twins here is a little silly. I think market is showing stability, but you know, the stability could be deceptive. You have hardly 100 stocks which are higher. So obviously we need to probably pull up a little bit before we can come off. But as I said, now only these large caps are left to lose. So chances are that the bigger the stock, the bigger the fall might be there.
Okay. Well, just to point out, the other asset classes are actually holding up today. The rupee opened at 64.45 or 42 thereabouts. Now it is 64.34. So the rupee's gotten a little better from morning lows. The bonds also have not given away much. It actually opened a bit higher and now is in flat terrain. Yesterday, I think 7.47 was where we closed, and I think today we are more or less at the same level, 7.475. So, you know, the other asset classes are actually propping up at this point in time or not collapsing, and maybe that could be giving a little bit of probably floor to the market at this point in time. But as Ashwini points out, it's only about 140 stocks that are in the green and a solid 1,600 stocks in the red. So the ratio speaks for itself.
Oh, absolutely. Let's thank our guests for joining us, our technical experts for giving us their views. And let's invite our market master for the day now, Pradeep Shah, the founder and chairman of Indasia Fund Advisors, joins us to give us his view. Pradeep, hi, good morning and thank you for joining us. The view in the market is that this is still a bull market correction and it's not the start of a bear phase. Is that your thought as well? And if yes, how should long-term investors approach it?
Well, firstly, after the budget and the introduction of the long-term capital gains tax, there has to be an inevitable trend towards sales by both existing shareholders, FIIs or mutual funds that are holding equities, because there is a tax break before March 31st. Many of the FIIs may not want to deal with the income tax authorities next year when they will have to file returns to set off tax losses against tax gains, and they'll go through the process of vexatious process of dealing with income tax officers. So some may, on the margin, get out of by March 31st. So the trend has to be down. Within that, we must recognize that the Indian economy is doing much better than before. The GST problems and the demonetization problems are behind us. GST will continue for operational purposes for small guys, but it's basically in demand terms that is behind us. We have oil at $67, but we are holding up very well. The results that have come out are very good. So overall, I think the fundamentals of the economy look better. We can be buffeted by inflows coming down, remittances coming down, oil prices creating a trade deficit, and of course our fiscal deficit remains. So those are concerns which we have to watch out for. But in the immediate opportunity will be when individual stocks correct dramatically because somebody sells and gets away. That's when the froth goes away, the fundamental values get exhibited, and then you can buy those.
But Mr. Shah, you know, the fundamentals of neither our markets, our companies, nor US companies are in question. Growth numbers in both economies are coming out looking brilliant, better than ever before. But it looks like the market ran ahead of all this, discounted all that, and is losing air. You have seen the 87 flash crash, October 1987 in the US. You have seen the falls of the early 90s and post 2001. I mean, does this look like the market loses a bit of air and then comes back, and therefore you will use the dip to add on to positions? Or do you think that it could lose much more because last year was so flat and bereft of volatility that this could be a hard fall simply because the markets ran, not because anything is wrong with the economy?
So I think sentiment change is what you're hinting at. I think that can happen. One of the triggers could be the outcome of, or perception of the outcome of elections that are around the corner. We have 8 elections this year at state level and so on. We've already seen some reversals in the polls in Rajasthan for the BJP. People have pinned a lot of hope on Prime Minister Modi and his government and all his initiatives. But at the end of the day, if he seems to be likely to be weakened, if the election results or the trend of public opinion suggests, then that will be a big sentiment turner, and that can lead to the kind of drops that you talked of. Likewise, in the United States, if there was a flutter earlier this week on account of interest rates, and if that calibration of interest rate increase along with reduction in purchases of treasury bonds and reduction in the balance sheet of the Fed is not handled well, similarly in Europe and similarly in Japan, that can cause quite a dramatic shift because those are interest-sensitive markets, and money flows can get allocated from equity to debt, and there can be correction in debt holdings in value, etc. And the yields, there can be a re-rating of price-earnings ratios, and the whole market can correct quite substantially. So you have to be aware that there are too many imponderables to make a complete prediction for the future, but one will have to react to developments as they come about.
Okay. Pradeep, good morning. So what pockets of the market do you think would be the buying up, in the buying zone now after the kind of correction that we have seen?
So, as I said, there is going to be inevitable selling before March 31st on account of the long-term capital gains tax. But within that, now I would look at individual companies first, sector agnostic, because individual companies is what lead, from management, their products and their services and their competence in delivering those products and services and the growth that they're experiencing because of new product introductions or new service introductions. So that fundamental principle will remain, that you look at individual companies to invest in. And I think the opportunities in the pharma space, which has corrected dramatically because the perception is that Indian pharma companies are not going to get the US market. I think the US, in order to reduce their medical costs, will have to inevitably come to India for a portion of their pharmaceutical requirements, and that portion will be good enough to give a fillip to our good companies which are quality conscious and are service oriented. Similarly, you see the IT sector. I think some of the companies are doing extremely well because they've realized that it's not just body shopping, it's not just supplying people that is going to give them a future. It's providing solutions to their clients, and clients are realizing that Indian companies have that ability to provide solutions, both domain knowledge as well as technical expertise and the ability to package the two together and offer a complete solution. So I think that sector certainly will give opportunities. Similarly, in the consumer product sector, if there is greater correction for whatever reason, there may be opportunities because India is a growth economy at the end of the day. We will continue to see growth and an unsated economy, so there will be demand for consumables, consumer durables, and so on. I'm quite optimistic about India. I think there are clouds on the horizon in terms of the politics and the oil prices and so on, but we can cope with them if we address them well.
So what are your expectations as far as the earnings growth for the next year is concerned for FY19? Are we looking at, say, high teens growth, or what are you forecasting?
Yes, the leading companies would grow substantially. We are talking of a growth rate of 7 to 7.5% in real terms, which may translate to about 11.5% in nominal terms. The leading companies should grow between 11 to 20%, without doubt. There will be, and some with new product introduction all can do dramatically well. I'm not talking of commodity price, I'm talking of steady state businesses that are organically experiencing growth. Commodity cycles may go up and down. The commodity cycle just now is favorable for the commodity producers because US, Japan, Europe are all in, and China are all in sync, are growing today. But that can correct, as I said, with US interest rates not calibrated well, or reduction in money in balance sheets of the central banks not calibrated well. You can have a correction there, and then suddenly the commodity cycle will seem to have vanished. So I would say just steady state businesses that have good products, good services, they will do well. I have no doubt about it in India.
By the way, the market is showing pockets of recovery. Look at the big rally right now happening in steel stocks. Of course, led by SAIL because the numbers were good, but SAIL is at the high point. Tata Steel ahead of its numbers is right now at the high point of the morning. That's SAIL for you. Just pull out Tata Steel's intraday chart. That stock ahead of numbers has now moved into the green. Jindal Steel and Power, which is one of the strongest stocks in the market right now, and also in the F&O space, that stock is also making highs of the morning. So there are a lot of stocks which are already showing signs of turnaround. So could be an interesting day. It's not, you want to sell everything. There are pockets where clearly there is some buying which is emerging, and steel is the first pocket where the buying has emerged clearly.
Even the gainers from yesterday that did well in their earnings, Bharat Forge, for example, has once again resumed its uptrend. Yes. It's now up about 1.5% and volumes there. So there is still stock picking going on amidst this volatility.
This is what we discussed in the morning as well, Sonia. Because in the past also, if you've had gap down in intraday, you either take that overnight risk that the Dow is going to do that. Next morning, if you're shorting gap down, there's a good chance that intraday at least there's a pullback, whether that sustains or not. But I think this big rally in steel, I think this clearly is the global factor also playing part. But ahead of numbers, the way Tata Steel is rallying, that I think is really the interesting bit for me.
Well, just a small bit. I mean, if that also the market is latching on to the falls in both Hong Kong and in Hang Seng and in Japan appears to have been arrested. They have not fallen further. Nikkei at one point was showing an over 3% downtick. Now it's 2.7. Hang Seng as well as 3%. It was trending with a bigger fall. So red, yes, but the shade of red is slightly lighter than it was an hour ago, and perhaps traders could be taking some succor from that point. Mr. Shah, finally, to wind up this conversation, you did point out to the political clouds, and I can imagine that that would be an important issue, and the near-term technical issue of the tax. So are you saying that we have kind of seen the highs for the year, because our big premium was our political stability? Therefore, would you go so far as to say that we have more or less seen the highs of the day as far at an index level is concerned?
I think we'll see a general drop in index price, in stock prices till March 31st, because there has to be selling pressure. Now, will there be overwhelming buying taking place from domestic resources or outside resources? I don't think so. As I said, the interest rate environment is changing. The Indian environment is changing also. Mutual funds, I mean, they have to declare a large dividend, the equity mutual funds, before March 31st, because they'll be doing a service to their customers by helping them save on taxes. So selling pressure is inevitable. Just how much buying will that take place? And that is based on sentiment. I think we had already discounted, you had pointed out earlier, that we have discounted a lot of the future already in the prices. So there was a lot of froth being built into some of these scripts, and that froth has to go. So clearly, I think what you're hinting at is right. I think there will be a general correction in the stock price levels.
Okay, thanks a lot, Pradeep, for joining us and giving us your view on the markets. But let's move on because we had a really good set of numbers that came in from Heidelberg Cement. Net profit this quarter versus a loss in the earlier quarter, and a boost coming in from the pickup in construction activity. That's what really caused higher earnings for them. Jamshed Nawal Cooper, the MD and CEO of the company, joins us now to talk about that. Mr. Cooper, good morning. Thanks for joining us. What the street liked about your numbers is that your power and fuel costs, your input costs have actually fallen this time around. Despite higher volume. So that's always a good thing. Can you tell us what led to that? Is it because of the waste heat recovery plant? Anything else? And do you expect to see lesser pressure from input costs going into the next few quarters?
You rightly said the basic reason is the WHR, the waste heat recovery plant, which has started operating and giving better results. So that is one of the basic reasons for it. Plus, for our fuel costs, we have already, we had enough stocks to take care of the fuel price increases so far. But yes, going forward, there is a fuel pressure which is coming up. The prices of fuel, the pet coke have gone up. So there will be pressures, but we will try to manage it more efficiently. We'll try to manage our fuel and power costs better.
Okay.
Okay, but will it, will it move lower because you have your investment in the waste heat recovery plant? Is this 15% or 15.6% margins very difficult to maintain? How much lower may it get because of the pet coke and other costs?
I don't think so it will be lower. We'll try to manage this within this range and try to improve it, because we are looking at efficiencies within the plant. So as the operating, the volumes are going up, the fixed costs are coming down to that extent.
Okay. Good morning, Mr. Cooper. Your EBITDA per ton, if you could give that number, and can things improve from here?
They are about 680 rupees per ton as of now.
Okay.
And it should improve as the prices, because this quarter, the next quarter, it should improve a little.
680 per ton, actually, that would be higher than what the market thought it would be. Yeah, we thought maybe 620. So, what would be the guidance? If you could give us the number again. Sorry, I missed that.
I won't be able to give you, because we are in the midst of the quarter, and I won't prefer to say a number, but definitely it will be better than that.
Okay. Directionally better than 680, you think?
That's right.
Okay. Well, I wanted to ask some details about your debt. What's the outstanding number and how much has been paid off? What do you target going forward?
Okay. See, right now our net debt is about 500 crores. And going forward, we are the next financial years, we will be paying about 150 crores more out of it. So it will further reduce to about 300 crores also, 350 crores.
In general, I wanted to understand from you what the outlook is on demand, because the sales volumes have grown very well this time, 16.5%. And we were talking about how demand has improved in certain pockets. But is it a price-led improvement that you're seeing? And what is the expectation?
See, the major improvement in demand is in the central India markets, where the markets last year, if you compared, their markets were very down. So the growth has been good, and on a relative basis, it is better. And as we see we have seen it recently, very recently also, the demand has been improving, especially in the state of Uttar Pradesh. And I think the demand has come out from the housing sector, the rural housing sector, it has come in. And I think it is going to stay for some time.
Did you get elbow room to take a price hike in January or February? And as you get to the peak building season before the monsoon, that's next quarter, yes, you see scope for more price increases?
Yeah, we have increased our prices in January, and also in February we are seeing somewhat increases which are coming in, but they are not very consistent, but definitely there is an inching up which is happening, and as the market moves, we keep taking the price increases and recovering the shortfalls what we had in the past. So it will keep improving, I think.
You will get more pricing power in the next quarter, you think?
That's right.
Okay, what's the capacity utilization, both yours and the industry, you think? Are we reaching the end of the flag?
I think the industry capacity utilization, what my guess is more or less, which I get, is about 73-74%. Against this, we have clocked in for the last quarter is about 88%.
Oh, so you must be looking for expansions.
Yeah, right now, as of now, we are at 88% capacity, but still we have headroom to go. And as we go forward, we have got to add a little bit of tweaking in the system. We can add up another 5 to 7% more into this capacity.
Okay.
So not an issue as of now.
Okay.
For a year and a half, we don't see a problem.
Sure. We'll wrap it up on that note. Thank you for giving us your outlook. So demand has definitely gone up, especially in pockets like Uttar Pradesh. By the way,
I
the
think
stock
two
of the
very
moment,
positive, just two very important positives. I think the fact that they could take price increases last month and this month, and the fact that 88, when did we last hear cement companies telling us that kind of capacity? I mean, they have been in the 60s and 70s for a very long time. And he says even if they do tweaking, in a year they will be near full capacity. So we are looking at fairly robust growth and therefore price increases.
And cement stocks are at the high point, but can't take my eye off the steel stocks, because that really is the big trade right now. Ahead of numbers, I think Tata Steel is the one which is really having a bit of a field day. Just pull out that stock once again. And that stock right now is up about 1.6%. You're saying something, Sonia?
No, actually, I was looking at Fortis Healthcare because, that stock is now up 14% and huge volumes getting traded on Fortis Healthcare. I think the street really likes the fact that the Singh brothers have tendered their resignation from the Fortis board, and now a deal on Fortis could be coming very soon. So, that is definitely one more stock to look at.